All right, this is Valero Q4 2021 earnings call summary. Um, this was a good one. Valero has been negative for, I believe, the last year, maybe even last 2 years, and so they've just recently, over the last two quarters, turned a profit. And so I don't have a pretty presentation because they haven't released the earnings presentation yet. But I did find some really great information that I wanted to share. What you're looking at right now is just the difference in revenues, and I call your attention over here to the year ended, right, versus the quarter ended. So this is 2020, 64,000 versus 2021, 113,000. That is 100% increase in revenue. And I mean, that just goes to show you the big difference between the the COVID 2020 versus 2021 recovery, right? That's really what that means, because we're talking about gasoline, right? We're talking about transportation. We're talking about cars on the road and driving and travel. And my goodness, I mean, there's no getting around it. 100% increase. So no wonder they blew the doors off of earnings this quarter. Um, I want to get to that number just real quick. They are, let's see, they beat on both revenue and profit. And as far as the stock price, I want to say probably more than 10%. Let's see. I know the stock price has really skyrocketed over the last week, and it was really increasing in anticipation of the earnings too. So 6.5%, not quite 10%, but 6.5. I think is the largest so as far as earnings reports go, that I've covered anyway. So that's that. And then the other thing that they discussed was really, how they came about beating on profit, and that's because during 2020, even though they weren't selling a lot of gasoline, they were still making it, right? And so what happened was they ended up with a bunch of gas in inventory, just sitting there. And so at some point in 2021, they started to sell that gasoline, but they didn't necessarily have to uh, make any, right? So that means that they're just selling gas that they've already made, and so their cost of sales was really low. So this is the other thing that was really interesting that they spoke a lot about during the call, and that is the what they call LCFS, is low carbon fuel consumption or something like that. And this is just the push by a few countries, a couple states here in the U.S. That want to have lower emissions in fuel. And I think it is kind of an overall thing too, for the federal government wanting to get fuel consumption, or not say fuel consumption, but try to get a lower carbon footprint, right? So just trying to get the transportation industry, whether it be planes, trucks, cars, to put out less carbon emissions. And so Valero is doing that by creating these different fuels. Okay, and so the one that I thought was really interesting is renewable diesel. So they just finished their second renewable diesel plant, and they said that they are selling everything the plant is making, and they are in process of building a third plant, and they expect that plant to also be almost at capacity. Now, what is renewable diesel? They are literally taking cooking oils from, I assume, restaurants like McDonald's and things of that nature, and refining it to make diesel. And what they said in the call was that as of right now, the used cooking oil is a little bit cheaper than soybean oil, but they expect that the used cooking oil will at some point be just as much as far as cost as soybean oil. So meaning that they may not always be able to get away with getting cheap used cooking oil. They may have to use soybean oil, but they are still using the used cooking oil as of now. Of course, the other additive that we all know about is ethanol, and they are moving to put more and more ethanol in our gasoline. In fact, they expect that by 2025, the gasoline is going to be made up of something, I believe, like 25% ethanol or something crazy like that. Um, the other thing that I thought was really cool here, and I'm going to have to move this page down. So just keep in mind, we got gasoline over here, refining, renewable diesel is the second column, then ethanol is the third column here. And what I was really curious about um, was how much they were making um, for this. So let's look at gasoline first. So total cost 105,016 divided by total revenue 106,961. All right, and so that's saying that 98% of their revenue is paid out basically in oil and the refining process. Okay, so only 2% of what they sell in gasoline is actually going towards any sort of profit. Okay, and keep in mind there's a lot of cost. After that 2%, you still have to pay the employees, still have to pay CEOs. So this is just how much it costs to make the gasoline. Okay, so 98% of the revenue is cost basically. All right, now let's look at the renewable diesel. We got 1630 divided by 2342. So 70% of the revenues in renewable diesel is cost. And now let's look at ethanol. 5115 divided by 5589. 90%. So the renewable diesel is a huge profit margin, meaning they're making a lot more money with the renewable diesel than they are anything else. But as you can see, as far as the bulk of their sales and their revenue, they sell way more gasoline and they sell way more ethanol than they do the renewable diesel. But like I said before, they just finished their second renewable diesel plant and they're building a third one. So they're ramping up this really, really fast, and they are going to sell more and more of this renewable diesel. And I think what we're seeing right now is a real move into gasoline and specifically diesel for trucks coming from these used cooking oils, soybean oils, things of that nature. They're moving further and further away from oil. I'm sure oil is going to be what we use to create gasoline and natural gas and all those kind of things for quite some time. But vegan gasoline is here. And they were asked a question concerning SAF. SAF is basically jet fuel, but it's not usual jet fuel. It's low emission jet fuel. And what they're saying is that right now there are some tax credits that you can get for basically making the jet fuel, but the tax credits don't they're not high enough, and the market is not big enough to make it worth Valero making or selling this low emission jet fuel. But they do expect that it's not really about, you know, um, how the price is going to get there to make it more economical, but when. So they're saying that it is guaranteed, right, that at some point planes will be flying on low emission jet fuel. So again, just going further and further away from the traditional gasoline, and more into gasoline mixtures, and then just straight up renewable fuel, right? The other thing that was asked was, of course, Valero purchases oil to then refine into gas and all these different things. And they did mention some problems in the Middle East between, I think, Turkey and Iraq. There's also an oil spill right now in Ecuador. And of course, winter weather has stopped some of the production up in Canada. And so, of course, that means that oil is going to be a bit more expensive. That also means the companies like ExxonMobil and IMO and EOG and all those guys are probably going to see some nice profits here in the very near future, because, like I said, oil is going higher. Of course, that makes it a bit harder on Valero, but I'm sure they have long-term contracts in place to kind of deal with that. There was really nothing else other than the fact that they have a bunch of cash right now, and the question is, what are they going to do with the cash? Are they going to raise the dividend? Are they going to buy back more stock? And basically, they said that they definitely want to raise a dividend, but they have to be very careful because this is a historically volatile market and volatile stock price, and the last thing they want to do is raise the dividend too high and then have to cut it. So it doesn't look like they're going to do much of anything. Also, when it comes to buying back stock, again, because they're making so much money right now, the stock price is really high. It doesn't make a lot of sense for them to buy back stock when the price is, 86, almost $90. So all the cash that's sitting on the balance sheet is probably going to sit there. They are trying to take off more debt just to make themselves look a bit better. And so when they do need to, they can always borrow money to pay the dividend if they need to.